Investing is like driving a car. You need to know which lane you are in. The type of account you choose for investment will determine how fast and how efficiently you are able to reach your goal. I welcome you to day 10 of our Money Mastery. And in this week, we said we're going to be dedicating our time talking about investing. And what we'll be discussing today is going to be on investment accounts. What kind of investment accounts can you have to manage your investments? Basically, our investment accounts can be categorized into two, just for simplicity's sake. We have your retirement accounts that you can have, and we have some self-directed accounts. For your retirement accounts, for those who are based in the US, you have your Roth IRA, you have your 401k, you have your solo, you have your simple, you have your SEP, and all the likes. Those are different retirement accounts that you can have. For those who are not in the US, whichever country you are, you can look at what are the retirement accounts you could have to manage your investments. You can ask your CPA, you can ask your accountant, you can ask your brokers or some brokerage firms to tell you more about the type of retirement accounts available in your country. In those retirement accounts, for those who are in the US, I will just talk about two. That would be your Roth IRA and your 401k. Your investment in Roth IRA accounts is after-tax money that you invest in your Roth IRA accounts. And at withdrawal, you pay no tax. At withdrawal or distribution, that is, if you qualify to make a withdrawal on that account because there are requirements. And also, maybe at retirement, if you're retired and you can start taking distribution from that account, no tax is charged. And your investment grow tax-free. The good thing about this account is that it's highly recommended, good for young people or those who are just starting their career, because at the start of their career they are within low tax brackets, meaning that at their young age, when they start working, they are not earning too much of money that will put them under high tax bracket. Even if you are at high tax bracket, possibly you expect that as you move along your career ladder, your income or your earnings will continue increasing, which means it will make you to stay, at a very high tax bracket. Now you can start taking advantage of paying little amount of tax on those your money, and you can allow your money to grow tax-free by the time you are making distribution or withdrawal from that account. That is how advantageous that account is. Then we'll talk about your 401k. The money invested in your 401k are pre-tax money, which means no tax has been deducted from that account, okay? And the good thing about this account is this: it helps you to take advantage of workplace benefits. What do I mean by taking advantage of workplace benefits? It means that your employer can contribute to that account. It depends on each organization. They can have some certain percentage that you contribute that they match up. So it's a way of maximizing all the benefits you could have in your workplace. That's very great. But the downside of this account is this: at the time you are making withdrawal or distribution from this account, there are requirements. If you meet those requirements to make withdrawal or distribution, the money you withdraw from this investment account is taxed. So don't forget that the money you invested are pre-tax, which means they are not taxed. So your money grow, with all the taxes that you should have paid on it. So by the time you are making withdrawal, you have to start paying taxes. And the taxes you'll be paying will now depend on your tax bracket at the time you are taking withdrawal. That about the 401k. So there are other retirement accounts that we'll not be able to talk about right now. But with time, maybe by the time I start releasing my materials, you can start reviewing the different type of retirement accounts that you could have. The second category, which I may mention of, is the what we call the brokerage accounts. And these brokerage accounts is not limited to whether you are in the US or when you are in the whichever nation around the world you are. You have investment companies, you have brokerage companies that can help you set up these accounts. It could either be you open an account with any investment company online or brokerage company online, or you can walk into any brokerage firm that you want to have a brokerage account. This account, the good about this account that It helps you to supplement your retirement account. It helps you to build wealth in the long term, as you work towards your retirement. Also, there is no limit of the amount you can have in this account. There's no limit. Also, by the time you are withdrawing from this account, there's also no limit. There's no requirement of what age, what amount you can withdraw from this account. But the downside, the money you are investing into this account is your after-tax money. It means that tax has already been deducted from the money you are investing into this account. And by the time you are withdrawing, you are also subjected to tax. That is, for all the dividend, all the interest you have earned on your investments are subjected to tax. You can ask your broker or your investment advisor or your financial advisor or your accountant or whatever to advise you on which are most tax efficient portfolio you could have. So it also remains so liquid and flexible. So liquid and flexible in the sense that at any time you can withdraw from it and you can turn it to cash at your own will. So that's the good advantage about brokerage accounts. So friend, what are the investment accounts that you have? Let us know in the comment section. And please don't forget to follow us, to like our page, to subscribe to our channel, and to also share this content so that it can reach wider audience. So in the next video, we'll continue about investing. Bye for now.